Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. All right, Nick Santiago, President and CEO in the Money Stocks, coming up on our show. Nick, thanks for showing up. Appreciate it.
Great to be back, Michael. Thank you for having me.
Oh, my pleasure. Okay, bases are loaded. Casey's at bat. J.P. Morgan's up at the plate.
Well, right now, JPM is still holding up. This is pretty much a stock market barometer. The stock really hasn't given anything back yet. So until the stock gives something back in a big way, the markets are going to hold up. I calculated a level on JP Morgan. Even if it does pull back, stock is still going to have very, very good support around the $43 level, where traders could look to be a buyer at that time. In the meantime, right now the stock's still holding up very, very well. And as you can see, the markets, for the most part, I mean, we're just getting just a shallow pullback here today.
Yeah, it seems to me every time this thing pulls back over the last several weeks that we get institutional money, just got to put it someplace. And they might as well just stick it right in there. That seems what's happening.
Yeah, well, right now, I mean, this is 2013. You do have a lot of central bank money printing going on around the world, and like you said, the money has to go somewhere. These central banks give it to the agency banks, and they go out in turn and buy S&P future contracts and Russell contracts and NQ, NASDAQ future contracts, and sure enough, that just lifts the markets, and that's what's happening at this time at this stage of the game.
Okay, well, let's talk about another one. What about Wells Fargo?
Well, Wells Fargo I wanted to bring up today because this one is actually setting up as a very, very nice bullish consolidation pattern. So the stock has a tremendous amount of support around the 3362 level, which is the daily chart 200-day moving average. But if you look at the pattern that it's making, just really hovering around between $34 and $35, that's setting up for bullish consolidation. I think traders can ultimately play that to the upside. You may want to hold off a little bit here, maybe the next week or so, let it base a little bit longer, but that's one I'm going to probably alert my members to pick up. And I really like it around that 3360 level if it does pull back down there. If it consolidates a little bit more, I think you can pick that thing up. And, that thing has pretty much $38 written on it.
Okay. All right. What about the gasoline?
Yeah, last week I brought the UGA up. First time I ever brought that up to you, but the UGA now is trading at new 4-year highs. And every time gasoline has gotten up to this level, or the UGA has gotten up to this level, the markets have gone into a corrective mode. So I think traders now need to realize that this current rally that we've had since basically ever since the fiscal cliff deal was announced on the New Year's Eve holiday, we're a little bit long in the tooth. So traders need to be aware that these markets are going to start to come in. Also, high gasoline is a tax on the U.S. consumer, and as you know, people are now seeing less in their paycheck every week as well. So this is going to eat into consumer spending, which accounts for roughly 70% of the U.S. GDP. So I think people need to realize this market is getting long in the tooth, though.
Okay, well, what about this breakout that we're looking at in the UGA? I mean, I understand what the ramifications are for a drag on the economy, but it's breaking out. So
yeah, you got a breakout here. This is a new high. I mean, this thing could easily trade up to $66. So, but it's going to be ultimately how you want to view this is, hey, gasoline prices start to move up to $4 a gallon across the country. That's a real negative for the stock market and for the U.S. consumer. But right now, this is soaring, and it will have implications down the road for the stock market.
Okay, I got that. But if I may, and I rarely do this, the devil's advocate thing.
Sure.
If this stock market doesn't turn around and we get a rally in the energy prices, wouldn't that be something that's telling us a completely different story than what we've all been thinking about? In other words, maybe there will be demand.
I mean, you could look at it like that. I think there will be demand, or at least it could be perceived as that for a little while. But at some point, that's going to be just a big negative. Okay,
got it. But be that as it may, then there are some early warning triggers that I know you've got out there that's saying, okay, now it's starting to tip over. Can you help us with that?
Sure. I mean, at this stage of the game, I am not very bearish the market at all. I think the market is still holding up. Any pullback will still be a buying opportunity. But down the road, the overall stock market, this could be a climatic high being made here. if you get gasoline prices just surging the way they are, oil prices surging the way they are, it's just there's no real positive here. The truth of the matter is that we're going back to a 2008 type scenario again.
Okay. All right. Got it. We'll explore that later when we get into the financials too. But you also wanted to bring up Phillips 66.
Yeah, I wanted to bring up these refiners because Phillips 66 has just been, just a monster to the upside. This thing is broken out too. Now it doesn't look attractive because it's gone parabolic, and that's an unsustainable chart pattern, unsustainable move. But these refinery stocks have just taken off to the upside. Phillips 66, Tesoro is another one, HFC, which is Holly Frontier Corp. They're all very, very overbought, so you don't want to own these things now. But on pullbacks, you can look to own these stocks after they form some type of a correction. They come back to their breakout points.
What is pushing all this stuff up?
It's easy money, Michael.
Okay.
It's just a lot of look at what's going on here. You have Europe printing money. The Federal Reserve is printing $90 billion a month. You have the Bank of Japan printing unprecedented levels. When have we ever seen the yen plummet against the dollar like this? And then you have, Swiss National Bank, Bank of Zimbabwe. Everyone is printing money. So, right now it's the glory days. We'll enjoy it while it lasts, but this is unsustainable. This is somewhat dangerous in the future. So
one of the key things to figure out is when are we going to turn around from the massive printing? When is that going to end, right? Where's the U.S. dollar going to finally rest at?
Right. I don't think that's going to happen, that the massive printing is going to stop. I think the only person that's going to stop the runaway freight train of printing money is going to be the stock market. And one day we're going to wake up and hopefully we're going to be able to figure it out and say, hey, this is the day, or this is a turning point where the market's going to say, hey, this is not healthy anymore. We love inflation. We love all this money creation. But the truth of the matter is there's going to be a day of reckoning where this is no longer healthy. You just can't print your way out of everything. And that's basically not only what the United States is doing, but, you have the Bank of England, European Central Bank, Bank of Japan, Swiss National Bank. Bank of Australia, the Australian Central Bank. You have countless. Forget the Asian markets; they're all doing it as well. This is not healthy. You just can't print money, and it's not a game of Monopoly. It's money has to go somewhere, and it has to have some value. And if you just keep deflating and diluting your currency, there's going to be a big price to pay for that.
Okay, so I'm getting the feeling that that's really like Valero. You brought it up. It's a huge move today. What was like 38 to 43-ish, right? Yeah. Almost 44. Mm-hmm. That's a big move in one day for this stock. Well, or actually, excuse me, I got the weekly charts up there. But the point being is these are inflationary moves, is what you're saying. There's not a lot of industrial demand that's pushing this stuff up.
No, there's definitely some demand picking up. I definitely agree with that. You can just look at the transports, how they've definitely increased. But this is all central bank driven. The central bank believes if they could get the stock market up, ultimately business and economic recovery will come across. But the problem is it's happening across the entire world. Everybody can't just keep printing money to try to increase their exports. At some point, something's going to give here, So I think we're running into the danger zone, in the latter part of the year.
Okay, latter part. Now, I'm glad you brought that up because I did a little bit of my math on this stuff, and it told me, and I'm not saying I'm right, but it told me that we should have a much lower dollar going into the summer months, like July. And I'm getting the feeling from you that lower dollar is really part of your overall, if you will, the symphony of how you're handling the portfolio.
Absolutely. Right now, we have a critical level on the dollar in a weekly and monthly time frame. If you just take a look at a dollar chart, a U.S. dollar index chart, and you look at the monthly chart, basically we have a line in the sand right around the 78.50, 78.60 level. A close below there, or at least a weekly close below there, and in particularly a monthly close, would be very, very bearish for the U.S. dollar. So, again, if that dollar goes down, look how the dollar has plummeted already. The lower the dollar goes, the higher gasoline becomes, the higher food becomes, food products such as wheat and corn and anything like that. Oil, heating oil, we're right in the middle of winter right now. These are all short-term positives, long-term negatives. And, the weaker currency deal is being played by every nation out there. So I just keep putting up the warning flag. We're going to enjoy this. We're going to trade it alongside. We're going to trade the markets. But overall, we're coming into a danger zone now.
I got that. All right. Then you had another stock that you wanted to talk about, SMH, the stock index, excuse me.
Yeah, that's the Market Vector Semiconductor Holders. This is really a good barometer for the NASDAQ, and you'll see that the semiconductors have been doing very, very well, especially since mid-November. The SMH was trading around $30. Now it's at $34.50. This one is going to come into a major resistance level, a shortable resistance level right around the $35.40 area. That's a level where I will be looking to short this market if we come up right into that without consolidating below it. But when the semiconductors top out, it's usually a sign that the NASDAQ is going to plunge. So I think traders want to be aware of this. I don't share this with everybody, but this is something I've used very successfully over the past 15 years. So around that level, I think that's a real danger zone for the NASDAQ market when the semiconductors get another dollar or so higher.
Got it. All right, we're about out of time, but before we go, you always have events coming up that our audience can participate with. Got anything coming up?
Yeah, we do have another event coming up. My partner will be teaching this. I believe this is going to be on February 9th. He's going to be teaching proprietary keys to trading webinar. So that is our next one. And then we will be having an In the Money Stocks methodology webinar, I believe, on January 26th. So we do have a couple of events coming up. And, again, I think all traders, if you're really a student of the market, you need to attend these events.
Oh, definitely. Even if you don't trade, to know what these guys know. I'm talking about you, Nick, and is it Gareth?
Gareth, yes.
And Nick, to know what they're doing and how they're doing it definitely helps you. Even if you're using managed products, at least you get the underlying theory of what's really going on from guys who pull the trigger and actually hit the bullseye. I'm really impressed with. I've known you for a year, and you've kept us on the right side of the market all the time.
I try my best, Michael, and then that's something that we try to do for all of our members and subscribers each and every day. You
do a good job of it too. All right, how do they get in touch with you, and where do they click? What's the website? So
come on over to InTheMoneyStocks.com. We offer a 7-day free trial to our chat room where you can see everything that we're doing each and every day. Today, Michael, we've had 7 scalp trades, all winning trades in the chat room, and that was all done before the lunch hour.
That's what I'm talking about.
Yeah, and then you could come over, try out our research center. You'll get all of our nightly videos. You'll get my cycle work. And, again, we just put a ton of content out there. And even if you're curious, just come over and check out the blog. That's free, and I put out a morning video every single day, and I give out free trades every morning, for free. So, people don't even have to sign up. They could just come over to the blog and check it out.
Nick, thanks for keeping up the good work. Appreciate it.
Thank you very much, Michael. Have a great day.
You too, everybody. Nick Santiago, President, CEO, In the Money Stocks. The guy threads the needle from 1,000 yards out. He's really good at what he does. Coming up next,